Hey, good morning, everybody. It's Hammer. That light is awfully bright. Let's tone that down a little bit there. There we go. I think that's a little better. Anyway, good morning, y'all. Coming to you from the sexy smexy hotel room here in West Virginia on the way to Pittsburgh this morning. So, anyway, good morning, everybody. It's Friday, July 10th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great originator success, grab and go social, and great sensei. Feeling a little naked this morning. Left my hat in the Jeep as we were coming in last night, so you're catching me hatless. Welcome to Hammer Naked. But anyway, good morning. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time. If you want to make sure you don't miss a moment of the show and that you catch on with everything, make sure you're signed up for our text alert that goes out as I'm going live. You can sign up for that at hmmr.io/reminder, or use this cool QR code over here, and we'll get you all signed up for that as well. So you can also sign up for our daily email that goes out each morning at www.ratelockadvice.com. And don't forget, $7 a month will help you protect your pipeline. Check out our text alerts at www.ratetextalerts.com. So good morning, one and all. So glad to have you here. If you're here this morning, say good morning. If you're watching on the replay, do me a favor. Give me a hashtag replay in the comments. Let me know that you were here. Don't forget to smash that like button. Maybe throw us a comment or two. Again, welcome to all the live folks. Let's go ahead and jump in and get started. Today's lock advice. We want to lock anything closing in the next couple of weeks and cautiously float the rest. So stick around. I'll tell you exactly why we are looking that way. Let me go ahead and share my screen, and we will start off there. Let me bring up a quick recap on where things are at and what's going on. So taking a look this morning, you can see that mortgage-backed securities currently just flat zero on the day. 10-year treasury yield currently at 4.55. Now, if we take a look at what happened yesterday, let me zoom in a little bit here. One thing to note is that we actually ended the day better than what we were looking at on the live yesterday. And I'm not throwing shade or anything, but when we went over the numbers on MBS Live, it showed us up a couple of basis points. And then all of a sudden we jumped up to plus like 20 something basis points. And that appears to have been because of the rollover, and it wasn't accounted properly in the beginning. That's why I didn't even bring it up. So, but taking a look, we were actually up on the day yesterday, which did give us some better pricing. You can take a look here. Instead of 6.68, we actually improved a little bit, 6.65, and I'll come back to that. So, but as far as what happened during the day, we saw just some steady increase through the early afternoon, and then we saw those gains disappear in the late afternoon. So, what goes up must come down. There were not a lot of lenders that repriced better, so it really didn't matter. But we basically, once that was taken out, we netted out about the same as when pricing came out on the day. So we're used to seeing this. It was a reaction to, different expectations of what was going on in Iran, oil prices, etc. So that's kind of where we were at there. As far as today, rate sheet should be unchanged, about the same. Again, a little bit better than the worst level. I got to tell you, with everything going to pot the way that it did in Iran, it was good that we didn't see oil prices push up higher, and we're not seeing a stronger reaction. This puts us very much in the range. We've seen these rates for over a month now. We've seen this exact, pricing multiple times. Over that time frame here, you could sit and go to 6.65. So really not much of a change at all. Certainly nothing that should cause any kind of panic. But as far as locking in, better pricing, we want to pick our spots. Reprice risk on the day is low today. It's a low trading volume day. It's a summer day. There's not really a lot that we have to worry about. There is a chance we could see some money parked in bonds for the weekend with some of the uncertainty going on in Iran. So Jerry said I saw at least a half dozen that repriced better yesterday. Yeah, but 60 something lenders out there. If you saw a half dozen and you want to call that six, that's really not. Generally, you're going to see UWM, Provident, maybe Rocket. You might see them improve their pricing a little bit, but generally not a big move. And hopefully they didn't reprice worse, but thank you. Appreciate that. So anyway, repressors today is low. Lock advice remains: consider locking anything closing in the next couple of weeks, because just you don't know what's going to happen. If something escalates, if oil prices push up over $80 a barrel, we could see rates creep higher from here. And that's not what we want to see. Next week, we got the CPI inflation data. So, that could help a little bit. But if things were to get ugly, but as far as the rate outlook for the next 15 days, I think rates move a bit lower over the next couple of weeks. They could move a bit lower if we see a positive response to next week's CPI inflation data. And even that isn't going to be a big one. We're not going to see a big rally, but we could see some improvement if that data shows some disinflation for June. And again, that's possible because of oil prices already starting to come down back then. But one could help a little bit. And then for ships to keep moving through the Strait of Hormuz. Again, markets don't care if we're dropping bombs. They care if ships are moving through the Strait of Hormuz. Right now, traffic has slowed down, but nobody's making a big deal out of it. There's not a lot of constant attacks. Ships have not, it wasn't open fully anyway. Ships were not moving at full capacity, full traffic. So we will see where this continues to go. But that's really what we need to see happen. The rate outlook for the next 15 to 30 days, if you look it out 3 to 4 weeks from now, the next couple of weeks, we're looking for those opportunities to see some improvement, maybe the CPI, but overall, rates aren't in danger of moving much. Over the next 15 to 30 days, it's the same thing. They're likely to be very much around these levels. Again, I'll show you the screen. We've been looking at rates that have been this way for over a month already, and that's very stable. Rates that are in that 6.5 to 6 5/8 range. We've been very much within an eighth of a point. A lot of that has to do with when we take a look at what's going on with Fed futures and expectations of Fed rate hikes. Once again, hikes, not cuts. We look at Fed rate hikes by the end of the year. Mortimer and are going to dollar on this one that he thinks there'll be a cut. I think that we will see. I think rates will be the same, actually, is what I think. But I think it's more of a chance that we see a hike. But I don't think the Fed isn't going to hike one time. There's other economists that are smarter than me that say that too. One rate hike isn't going to do anything. So I don't imagine. But if you look into where they look by March, then there's more expectation that we could see a little bit more. But I don't think we're going to be in that position. But anyway, this all has stayed the same. Right now, mortgage bonds, though, they're flat, up a basis point, down a basis point. Really, again, that's flat. The 10-year Treasury below 4.46 is still a good sign, 4.55. So we'll keep an eye on that as well. And then as far as anything that's closing in the next 30 plus days, a month out, I would be floating because there's not a lot of risk that we're going to see rates that are going to move significantly higher. You want to look for those little windows where you can get a better pricing. So, all right, my friends, that's it for today. I'm going to go grab some hotel breakfast. Hope you guys have a fantastic weekend. Let me know in the comments if you've got any questions. I hit that button a little early. I'll see you on Monday. Take care, everybody. Bye-bye.